Welcome to the Real Estate Association weekly meeting sponsored by the Center of Real Estate at California State University, Fullerton.
And then we have Corey Siegel, an investment banker with real estate. So, without further ado, Corey Siegel.
All right, there you go. Although my parents would very much love me to be an investment banker, I am not. I own a company called S&L Capital Group. My last name is Siegel, so that's the S. My business partner's last name is Ladislav, that's the L. I like to tell my kids that I'm the S, and I like to tell his kids that he's the L, you know, so we have some fun with that. But we're both Cal State Fullerton alumni, right? Coming back to the school is quite a trip. I live in Brea, I drive by it all the time, but to see how the campus has changed is amazing. And I was telling Greg earlier today, as I'm walking up the stairs to Langsdorff, I'm like, all these brand new buildings, I wonder what the inside of these buildings look like. And it's safe to say that those paint chips were here almost 20 years ago. So it's pretty amazing. That was a lot of great information, Brendan. The MLS is an unbelievable tool. But who is interested in residential real estate versus other aspects? Like, I don't have a gauge. Like, what do you guys want to do? Just spit it out. You want to be a realtor?
It used to be residential, but after joining this, it kind of opened up.
So we at the Real Estate Association, we do focus more on the commercial side.
Okay.
Just because it's more career opportunities, bigger organizations, Beaumont, Hiram,
Yeah.
Crew, that just have more resources available to us, and it's just I feel like it's just a broader pool than just residential.
But so by a show of hands, who wants to be residential? You're kind of in the middle. And who wants to be commercial? Who wants to be service oriented? Like, you had to raise your hand. So you have an idea of what you're interested in?
I'm
Or
kind of like in the middle.
You're kind of in the middle?
Just still trying to feel where I want to go.
When I was in college, I didn't even have any interest in real estate other than a couple of the courses. So it took me a long time to get into this. So the fact that you're in this room with some interest in what you're trying to do is really good. I think that fast forward 10 years from now, half of you will be doing this, half of you will be doing something else. It's just the way that the world works. So at S&L Capital Group, we provide asset-based bridge loans. So we're called a private lending company. We help real estate investors. That's it, here in California. So if you've seen any of the shows on HGTV, like the fix and flip or flop shows, vintage flip, those kind of borrowers and clients will go out to a company like mine to obtain a loan, to buy a property that's in distress, fix it up and sell it. Now, the reason why they come to a company like me and they don't go to Bank of America is because Bank of America does not like getting paid off on their loans within 6 months of issuing the loan. That's a problem for them. They take all of their loans, they sell them on the secondary market. The secondary market wants to hold those loans. That's why you have 30-year mortgages, right? On the commercial side, it's very similar. If Langsdorff Hall was being sold to a commercial investor, probably too big of a deal for me to be able to do, but if somebody wanted to come in and renovate every single room to make it brand new, banks may not want to take on that project because the building may be distressed. It's not that distressed, but it may be underperforming. It may be in bad condition. So think about when you drive through your neighborhoods and you see a multifamily apartment complex that's been there for 50 years, and you have the air conditioning boxes in the windows, and the doors are similar style, paint chipping off the walls, and then all of a sudden somebody buys that building, and 6 months later it looks brand new. That's what our company does. We lend money to people who want to improve properties and add value to property so that they can then go out to a bank or a permanent lender and get long-term financing on a building. So that's what an asset-based lender is, right? So that's what we do. My goal from today is to kind of have a little bit more of a discussion about how I got to where I am and starting my business. Give you kind of the funny story of the back of the napkin on how it started. And just kind of touch on, like, you're all in sales. Everybody in this world is in sales. So if you want to be a realtor, you're in sales. You want to be a commercial broker, you're in sales. You want to work for the MLS, you're going to be advocating for yourself within that company, you're in sales. So get comfortable with that as you get out of college and as you get into the workforce, because a lot of times people will think sales and they'll go, yuck, I don't want to be in sales. I'm not going to be a used car salesman or snake oil salesman. But the reality is, everybody's in sales. Now, if you take that word sales and you just switched it to advisor, that probably makes you feel different, right? So when you think of sales, let's do a little word association. When you think of sales, spit out the first thing that comes to mind. Anybody?
Sleazy.
Sleazy. Love it. Okay. Go ahead. Spit it out.
I thought more of an industry, car or something.
Cars, right? Anybody else?
Communication.
Communication. That's an oddly positive one, but thank you.
Pushy.
Pushy. That's yeah.
Marketing.
Marketing. That's a good one too.
Knocking on doors.
Knocking doors, right?
Aggressive.
Aggressive. That's
Clever.
accurate. Clever. All right. Now, if you say advisor or consultant, what are some words that come to mind there?
Hopeful.
Hopeful. Okay.
Helpful.
Oh, helpful. You said hopeful. All right.
I get some sort of like manager kind of vibe.
Manager, right?
Practical.
Practical, expert, informative, right? So when you're in real estate, you get real estate sales or real estate agent or real estate broker. If you want to get into loans, you're a loan officer, account executive. You're selling your product. You're selling yourself to a property owner why they should work with you. But if you are advising them on why they should work with you, it's the same thing, right? So real estate is all about sales. I've been in sales my whole life. Obviously, after college, I did not take advantage of all the resources that Cal State Fullerton has. I'm not sure if this real estate association was even here in 2009 when I graduated, but as I've removed myself from being in school and knowing that my business partner and I both are graduates here, this is where we met, I kind of look back at Cal State Fullerton and I go, man, what an opportunity that I missed. Being able to network and meet people who have interests like myself. So I really want to applaud all of you in this room for being here because, yeah, there you go. Everyone loves a slow clap. Because it's really important to just kind of, you'll never know the person that you're going to be in business with. My business partner was a CPA at Ernst & Young. I was in sales, bounced around a little bit. It was the financial crisis of 2009. Selling money, which is what people who lend money do, was a particularly difficult job when the world was shutting down. So once I got through my first couple of jobs, I ended up working at a company that does what we do in Los Angeles. And I had always stayed in touch with my business partner. He was doing a training down in downtown Los Angeles for Ernst & Young, and he called me and said he wanted to go out to lunch. The minute we sat down and started talking, I could see the person across the table was similar to what I was a couple of years before that. He was miserable. He didn't want to do what he was doing. So I recruited him to come to the company that we were working for. Now, when you work in small business, you have a lot of opinions on how people should do the work, right? I think as a real estate professional, there's going to be an entrepreneurial spirit that you will have to adapt to and adopt no matter what. You could have the most experienced broker mentoring you. That doesn't pick up the phone and make the call. That doesn't knock on the door and get the appointment. So as a real estate professional, you are the person, you are the brand, you are the person. There's no ifs, ands, or buts about that. That makes it difficult. Makes it very, very difficult. So as we were working at this other company, we helped build the company by about 200% of total loan volume revenue generated within about 18 months of me being there, and within about 6 months of my business partner now being there. And the company was ran by younger people, I guess not young in this room, but young in general. And they just had a little bit of a lost vision, in my opinion. And I was living in Orange County. My business partner was living in Long Beach. We decided to have these Friday lunches, I call them lunches, at this place called the Brass Monkey in Koreatown. So I call this story the Brass Monkey story. The Brass Monkey is a karaoke bar that provides frozen food that they throw into a fryer, no windows, sticky bar tops, suspect crowd to say the least. It was right next door, conveniently, to our office. And every other Friday or so, my business partner and I, we kind of ran the office for the company. We would go down there and kind of have an informal meeting about how business is, what do we want to do, How do we get things kind of going in the right direction when things work? Get out of the office when you're talking to people. It's very easy to get stuffed up in an office, at a desk, in front of somebody. Get people on your terms to let down their guard so that you can get actual information. Everything is buttoned up in this world. The sooner you can get those buttons kind of loosened up, the better information you're going to get. So we would go to this brass monkey, and we weren't very happy with where we were. And so as we were having a couple of Bud Light Zeros, no, just kidding, actual Bud Lights, you know, we started literally writing on the back of a napkin. We did X amount of dollars before both of us came to this company in loan revenue. 6 months later, we did this much. 6 months later, we now grew it to this much. What if we just did this on our own? And that's a crazy conversation to have, right? You know, at the time, 30 years old, wasn't married, didn't have any kids, similar to my business partner. We both had, you know, girlfriends that eventually became our wives. But we looked at each other and we were like, what are we doing spending 15 hours a week commuting from Orange County to Koreatown to work for a company that we didn't particularly like working for? But the job that we were doing, we loved. The speaking to people, the advising, dare I say the selling, the providing service, trying to be an expert in your field, right? And so it was like the back of the napkin at the brass monkey that we said to ourselves, like, if it doesn't get better by this date, we're gonna be gone. So, not to bore you with too much of the details, a couple months later, one of the partners, out of nowhere, decided that he didn't want to be a part of that company anymore, and that made our decision a whole heck of a lot easier. We were like, wow, this thing's really not going well. And so I still remember the date, June 20th, 2017 is when I gave my notice. 3 weeks later, we were up and running. So as young people, in any industry, real estate, no matter if you're lending, you're helping homeowners, you're a developer, you work with commercial, you're leasing, you're working in the MLS, you're creating a brand. When you have the least amount of responsibilities that you have in life, not married, don't have kids, don't have a mortgage payment, that's the time for you to take the risk on yourself as much as you possibly can. Because it'll become a lot harder when you have those things. I don't think today, with 2 kids, a 6-year-old daughter on Saturday, and a almost 4-year-old crazy son that I love to death, I don't think today it would be possible. So understand that what you're trying to do, there's never going to be a right time. It's never going to be perfect. And if you want to take a chance, take a chance. You're all here putting in extra effort. That means you're hireable people. The people that are not hireable are out putzing around somewhere. So if you take the risk and it doesn't work out, go get a job. That's okay. It's okay to fail. Because that's another thing that you will do in real estate. No matter what position you are in, you will fail repeatedly. And it sucks. But it's part of the process, right? You know, everybody says, it's about getting to that yes, right? And it's very cliche, but it's so true. So that's the brass monkey story. The brass monkey story is the really dive bar place that all of my ideas kind of generated from to be able to start our company at SNL Capital Group. Let's see. Now, from the business side of things, there are lenders that, anybody interested in being a lender? No, right?
I think you're our first guest speaker.
That is a lender.
Yeah, like on the capital side.
Well, we're a very niche lender, very specialized lender, right? So we're not the person that you would go to buy a home. Like we don't carry the licensing for that. So I'll just kind of break it down very, very kind of minute detail. I carry a California broker's license. Our company hangs our business underneath my broker's license. We do not carry what's called an NMLS license, which is a consumer license. In the state of California, being a consumer versus being a business is a very big deal. California is a litigious state, and consumers are very much protected, more so than just about anywhere else. So that can be an opportunity for some. If you are on the conventional lending side, It can also be a major, major hurdle if you are on the small business side, because it becomes expensive, it becomes regulatory, it becomes burdensome. California is a burdensome state to do business. So if you think it's going to be easy to just go and start your business, think again. You know, one of the things that I didn't mention about the story is my business partner and I were like, if we can just do the same amount of business that we did together at that company on our own, our lives would be perfect. We wouldn't have to do anything else. For the burdensome side of things, because it costs so much money in California from a small business side of it, licensing, state filings, ad nauseum. That was very naive to think. So back to the lending side. So the conventional side carries an NMLS license. In California, consumer loans are disclosed differently. Homeowner properties, if you're living in the property, the foreclosure laws are different. Everything, just think about everything is in favor of the homeowner. Nobody wants what happened in 2008, 2009 with the massive amount of foreclosure that we had to ever happen again. What they don't say is that all of the people that applied for those subprime mortgage loans, they all lied on their applications. But that's not the point there. It's clearly the bank's fault for foreclosing on people who said they could afford something that they couldn't. Anyways, on the investment side, it's a little bit more fluid. So working with business purpose loans or investment loans, it is considered a corporation or an LLC against a corporation and an LLC. So if you decide to not make your mortgage payments, the foreclosure process is still is a little bit quicker. It's still going to favor the property owner. So it doesn't ever favor my business unless I do everything correctly. So that's the difference between, let's say, like investment financing and homeowner financing. So for us, about 70% of our business and number of transactions, last year we did about 60-ish, 65 transactions, is on the residential value add side of things. Fix and flip properties, people who want to buy 1 to 4 unit properties to maybe get in better condition and then rent them out, create passive cash flow for themselves. We've done loans to nonprofit organizations, which banks typically don't do, because a nonprofit organization by definition cannot guarantee the loan. Guarantee, does anybody know what a guarantee on a loan is? You're signing your name, says I'm going to guarantee to pay you back personally, even if this one thing doesn't go well. So there are lots of carve-outs when you're dealing with that. The other 30% of our business, from a transaction size, number, would be commercial. So industrial properties, multifamily properties, small office space properties, retail strip centers. The major difference between, in just a very big summary, there's a lot of it, the major difference between residential and commercial assets, one, here I'll give you a couple. One, property owners are less emotional. When you own a home that's beautiful, it's your home, it's the most beautiful home. It's going to sell more than Tom and Sally's down the street because it's mine. You know, the shag carpet's been there since the 70s. It's nice. That doesn't happen in commercial. In commercial, it's analytical. It's numbers. How much income does this property generate? The bank looks at that and says, oh, you have this much income, here's the GRM, gross rent multiplier, or the cap rate. Your property value is worth that much. That's it. End of story. Maybe you'll get a premium on the age of the building, maybe you'll get a premium on the condition of the building, but it's relative, right? And Brenton rifled off 1 million acronyms, and I will say, real estate sucks in that event, I'm telling you. We are very good at creating acronyms. CRMLS, MLS, LTV, loan to purchase, loan to cost, after repair value, ARV, GRM, cap rate. It's nauseating. My Twitter bio says I hate real estate acronyms. No joke. It's the worst. But depending on what you're interested in, if you're a more analytical person, if you don't like dealing with other people's emotions, if you want to sell based on facts, you may be more interested in the commercial side of things. If you like the personal relationship, if you want to be friends with the people that you help buy and sell a home, and you think you can create that relationship to where they'll refer you to their other family, and you want to have that kind of kumbaya mentality, You might be more on the residential side, right? These are things I would have never known before I got into this business. And I didn't start in this business right after college. It took me from 5 years, probably 5 years between what I was doing to right after college until when I started at the previous company. So it's great that you're here. Our business wouldn't be possible without Cal State Fullerton. And so I just love being involved. I go to the Center for Real Estate Economic Updates. I'm actually a member of CREW. So if you're not familiar with what CREW is, Commercial Real Estate for Women, oddly enough, they do accept men as members. They love me, they're great. You want to indulge yourself into the industry in a way that makes it enjoyable for you. So one of the things that I learned over time, input does not guarantee output. You can control input, you have no control over output. You meet as many people as you want, you make as many relationships, that doesn't mean you're going to get business from somebody, right? You do all the right things, you make the calls, you knock on the doors, you go to networking events. All of this kind of stuff does not guarantee in any way, shape, or form that you are going to be successful. And it's really important to understand that. Because the sooner you understand that, the sooner you start going and making organic relationships with no expectation of anything back. CREW is the perfect example for me. It's a great group of people with a great cause in promoting women in commercial real estate. They are fun, but I don't expect anything from them other than their support, and I give my support back. So whatever it may be, your local MLS, your YPN, your investment community meetup groups, right? The sooner your expectations of getting something back from those people go away, the better likelihood you have to be successful. That takes time. So another little thing I like to say is there is no substitute for time. You will not become an expert in your industry overnight. You can pay for a lot of coaching, you can go to a lot of boot camps, you can do all the things to try and fast track it. You'll never become an expert unless you have the time and the time under tension. If you lift weights, that's what people say. Time under tension. It just takes time for you to get there. So, thank you for having me. I mean, I think that's probably good enough time, or
You've got as much time. So where do you guys get the money
great.
that you're loaning out?
So for us, we work with high net worth individuals. We work with family offices. Are you guys familiar with what family offices are? All right, family offices. It is a term in the investment community space in which private individuals can create, either they have a lot of money, or they can, them in conjunction with friends and family and independent investors, can pool their money together. Now, a family office in general invests in multiple things. Stock market, gold, owning property, but they can also invest in what's called trust deeds. And in real estate in California, your property is secured by two things: a deed of trust and a promissory note. Those things are tied together. The deed of trust shows who's the owner is, shows who the owner is, and shows who is the beneficiary of the loan. The beneficiary of the loan is the person, the entity, who has rights to that property if they're not paid. They technically have rights to that property either way, but the reality is, in practice, if you don't pay your mortgage, that beneficiary gets the property, right? So that's the lending side. So if you had $1 million available to you right now, and you wanted to act as a bank, you can lend money to investors. Let's say they're buying a property in San Bernardino that's $350,000. That has a $100,000 renovation, and they want to sell it for $7,000. You can lend them money and be the bank, and your name can be shown on the deed of trust. Why is that important? It guarantees that you're notified if there's a payoff. That's very important. If they want to refinance, they can't just refinance it without you. And so you are very much acting the same way as like a Bank of America or a Fairway Independent Mortgage or a whatever it may be. So we get money from high net worth individuals whose business model is to lend money. And a good way to kind of explain it would be, instead of having a 10-unit apartment complex that yielded you $6,000 a month, right? you can lend money that yields you $6,000 a month in a mortgage payment. It's very similar. And in fact, a lot of our investors have had exposure to property ownership. And maybe they get phased out. Maybe they don't want to deal with tenants and toilets and trash. So they sell their property and they turn it into a lending and a more passive type of business. My company connects the two. So we have a group of investors, number of investors that focus on certain transactions. Not all of my investors will do commercial deals. Not all of my investors will do residential deals. And then I go out and I find people who want to buy property. Again, not all borrowers or buyers want to buy commercial. Not all borrower buyers want to do residential deals. So we have to diversify the clients that we have and match them up with the investors that we have. And we are the person in between. We are a broker, right? And once we find the transaction and place the loan, the investor funds the loan, off to the races. So that's what we do.
I have a follow-up question on the borrower side. So if a borrower finds a deal, like what stipulation does he have? Does he have to put 20% down, like a loan value ratio? Is it higher than that? Like obviously it has to be penciled out so it works for the lender.
Right, and so that's a great question because I didn't clarify this at the beginning. When I say we're asset-based lenders, I don't look at tax returns. My joke is like, I don't even know what a tax return looks like. I look at my own, of course, if you're the IRS, but I pay an accountant to do that for me, so I don't even know that. Yeah, I really don't know. So we don't look at tax returns, whereas if you were to go and get a mortgage for a home that you want to purchase and live in, they are going to take a look at 2 years' most recent tax returns, your W-2, any type of income you have. They're going to vet that out. That's why that process typically takes 30 days, right? Now, if we go to the other side of it, and I'll answer your question in a roundabout way, because that's I talk for a living, so I'll get there, I promise. Now, if we go to the other side, and you're an all-cash investor, and you want to buy the same house that the 30-year mortgage person wants to buy, they need 30 days to close. You have the money in your bank account. You can close faster, right? Less stipulations. You have all the money. So on distressed properties, or properties that are in horrible condition, the bank has more questions. So that 21 to 30-day close could be longer. That bank may not have any interest in lending you money on that property. The all-cash investor, what do you think they can do? They can buy the property. They can renovate it. They don't care. So my company falls kind of in the middle, but we like to be a little bit closer to the all-cash. We want to be able to close on timelines that are similar to all-cash, 10 to 15 days, with none of the stipulations that the bank has, but we still act as a bank, right? We're a non-bank lender, but we act as a lender. So for us, the way that you qualify for a loan is, do you have the money to pull off the project? That's pretty much it. We don't have a minimum credit score, although good credit scores help. We don't have a minimum experience level, although experience helps, right? We want to know that if you have to have $100,000 down payment, you have $100,000 in your bank account. And if you don't, can you raise the money elsewhere? So minimum down payment for us on residential, if it's a value add deal, like a fix and flip or a fix to hold, is probably around 20%. There are loan structures on fix and flip that we can do what's called, in the commercial space, it's called CapEx funding or rehab funding. So we can do 80% of your purchase price plus 100% of your renovation budget. So all you have to bring in is the 20% down. You have the money for payments, and the money to renovate the house is sitting in an account waiting for you to get working, right? On the commercial side of things, things are way more conservative. You might ask why. It's because banks don't lend aggressively on commercial properties. So our loan to values will be between 60 and 70% sometimes. Again, if the value is going to be added, what does that do to my loan? If I do a 70% loan to value today on a multifamily 8-unit property, and the owner of the property can increase rents and improve the condition of the property, the value will do what? Increase. So if my loan is 70% on the initial value, and then the value goes up, now my loan amount is 60% or 55%. So those are ways in which we can get more aggressive on the front end. So then on the back end, the bank can pay us off. So on the commercial side of things, what we look at is a very common sense underwriting approach. Is the bank gonna be able to pay us off? Or, if somebody comes in and buys this with a bank loan, because you're gonna sell it, will their lender provide them a loan that is gonna be strong enough to pay us off? And if it's not, like I said, commercial side's a lot less emotional. Sorry, buddy, we're gonna have to lower your loan amount. Oh, but I only had, nah, thanks, see you later. So hopefully that answers your questions. You had a question back there?
So basically, you guys are like temporary underwriters for these projects.
I mean, I don't know how I feel about you saying that. No, I'm saying, no, temporary underwriter, I mean, I get what you're saying.
Yeah.
So we do the same kind of underwriting, though, right? We're doing a limited underwriting in comparison to commercial. I mean, I'm sorry, conventional, right? So we're looking at less, but we are putting more weight on the scope of work and on the plan for the project. Bank of America, when you get a loan from them, they don't care really if you're gonna renovate the property.
It's more standardized.
It's like, yeah, they just want you to stay there. Make your payments, I'm showing on paper that you can make it. With the projects that we take on, nobody's living in the property on the residential side unless it's a rental. But what we're looking for is your plan viable? So in a weird way, we do less underwriting for, and I think that's what you mean by temporary, I don't know, we can do word association with that later. No, we do less underwriting from a documentation standpoint, is probably a better way to say it, but we are taking more speculative views on the transaction, which makes it riskier, right? So our loans are more expensive than a bank loan, but we are also providing capital in 10 to 15 days. We are also not looking at your tax returns. And we're also banking on, as nice of a guy that you are, when you tell me you're gonna make this house really nice, we gotta believe you. And some people aren't really nice, right? So there's speculation on speculation on speculation that we look at, and that's where the risk, it's a mitigation of risk. Yeah, go ahead.
What was cultivating the relationship like with your sources of money? Was it something that happened quickly, or did it?
No. So it definitely doesn't happen quickly. I would say that, I think it was Warren Buffett that said it, like your reputation is the hardest thing to build and the easiest thing to lose. A lot of people in any industry, including our space specifically, put so much pressure on themselves to grow that they lose sight of what is really important, and that's your reputation. And so we always want to do more, no matter what. But you have to make sure that your investors are secured, your investors are in the loop. It's not all good news. But how do you put processes in place for you to impress them, right? So why I say it like that is because my business partner is a CPA, he sat for his level 2 CFA. I'm just a guy. I just do this, you know? So he is very analytical. He's not as boring as he sounds. He surfs, he skateboards to get coffee every day from his office. Super nice guy. Very athletic. So he's not a guy that's like, you know, your typical CPA. But what he and I did, we still have it. From the very first day that we started, we took out a yellow pad of paper and we wrote down every single step that we needed to take, from originating a loan to placing it with investors. And then from that point, helping service the loan with the client, all the way through payoff, all the way through the recording of the reconveyance, right? And when you're organized, you run into one person and they ask you what you do, they get impressed because nobody else is saying it like that. Now from that one person, they may know somebody else. That's where networking comes into play. That's where working with organization, another acronym, California Mortgage Association. My business partner is president of the California Mortgage Association. And the private lending space in California is a lot smaller than I think most people really believe. So once you kind of get going, there is that snowball effect. So it's not easy, but there's plenty of capital out there for good deals. Just don't be the idiot that says that your deals are always good. Red flag, you know what I mean? When somebody calls me and says it's a slam dunk deal, I go, all right, buddy, good job. It's so easy to do, and, you know, all that kind of stuff. Yeah.
So what type of returns does your average investor get?
So our loans are usually, there is a yield that we charge, there's an interest rate that we charge our clients, there's a yield that we return to our investors. Those things are usually separated by 0.5% to 1%. The reason being, we make that middle amount of money, okay? We also charge origination on our loans. just like Bank of America does. Don't let anybody tell you differently. There are rate buy downs, there are prepayment penalties that you can buy down. Origination is charged on every deal. You just don't know it as a consumer, which is very odd because they protect consumers so much. So the rate of return for our investors depends on the deal, averaging about 9.25% to 10.5% annualized. Our loans are interest-only loans with a balloon payment on back end, no matter what we do. So if I lend you $500,000 today, you're going to make an interest-only payment from the time that you're in the loan, and then the $500,000 is due when the loan is due. Most of the time, it doesn't get to maturity because there's either a payoff via a sale or there's a refinance from the bank that pays us off.
Yeah, I'm in a meeting, I'll call you back.
So, oh, come on, put them on speaker. Let's do it.
Yeah, for 30 minutes.
30. Anything else to say? Yeah.
I have two questions. When you found out about the business partner leaving from the original place that you were at,
Yeah.
and you guys were trying to start up, did you guys take customers or,
So you know, I'll answer. Customers in real estate follow the profession, right? If you're a real estate agent and you work for Keller Williams and then you move over to Coldwell Banker, nobody's working with Keller Williams anymore, right? No difference in the loan space. So, yes, it wasn't, I purposely didn't call people and say, hey, here's what I'm doing. I actually took an approach that was very, very transparent. I had the other owner of the company come in. I said, hey, we're gonna call these 20 people. And I'm gonna say, hey, I'm leaving the company. This person is gonna be taking control of your file and your account. It's been fantastic. I wish you luck. You're in great hands, right? Because I didn't want that on my conscience. It's funny though, because fast forward a few years, I don't talk to those people at that company because they think, you know, all these weird things happen, which he sat in the room when I had those calls. So to say that it was anything other than what it was just not true.
And then my second question, you said that, 2017, and, it's a little bit of a slow roll shortly after that COVID, hit, did it, how hard was it to, try to recover from that, or get past that?
Do you see this part right here? That chap goes back up here. No. So COVID was interesting. My business partner and I talk about this all the time. I think there's always something in the world going on. I mean, it's just the reality of it, right? It seems like there's political strife, there's world wars, there's COVID, there's interest rate environments, there's the Great Recession, financial crisis, housing crisis, the housing crisis, right? So what's next, For me personally, when we started in 2017, I think the way that you treat people in business will show if you make a bet on yourself very clearly, because after I left, matter of days and weeks, people started, we're on LinkedIn, we're on social media, we're promoting our business. How can I help you? It's the most humbling experience I've ever had. It made me feel like, oh, I did treat these people right, And no, I wasn't expecting them to call, but now they are, which is fantastic. And they're not doing deals with me, they're sending somebody else, right? So when we first got started in 2017, it was all this natural momentum, which was good on one hand because we actually made money. It was horrible though because it was wow, this is easy. Right? You do stupid things like get complacent. When COVID happened, the most interesting thing about COVID was it was personal for me. My wife and I had just bought a house in Brea. My daughter was 1 year old. We lived in this little tiny 2-bedroom, 1-bathroom house close to downtown Brea. We wanted to have a bigger family and another kid at least, and I work from home. I'm not commuting. After doing 15 hours a week to Koreatown, I'm not doing it. And so our monthly expenses went up in January of 2020, right? And new business. My wife was in residency, so she was not making a very large salary, right? She was going through medical training to be a psychiatrist, so she was capped. There was no commission in that space whatsoever. And then COVID happened, and since she's in residency, she's working at a hospital. They don't shut hospitals down during pandemics, if you don't know, right? We had a 1.5-year-old daughter whose daycare shut down. So here I am having full-on panic attacks because our monthly expenses went up double. The world is shut down. I'm trying to build a business, and I've got this little snotty little girl running around the house trying to keep me on my toes. It was crazy. But what ended up happening after COVID, so I was very worried, very worried. I just thought, man, what are we gonna do? This is a huge mistake. If you guys have ever seen The Tiger King, I was like, I'm financial. So, but COVID ended up being like a trampoline to the real estate industry. So we ended, you know, it was a few slow months, and then business just took off. The other kind of hurdle that we had was in 2022, 2023, when interest rates went from 2.97% all the way up to 7%, and it seemed to happen in 9 months. That was more difficult, to be honest. Not because of rates, because our rates then became more competitive. Let's say I'm pricing a loan at 10, the conventional loan is 7. That's a lot easier than if I'm pricing a loan at 10 and the conventional loan is 3, right? People will wait out to get an investment property through Bank of America for a 7% spread on the yield, right? But if there's 2% spread, it's like, hey, let's do deals. Problem became when interest rates went up so much, transaction volume went through the floor. I was going to cuss, but I'm not going to cuss because I'm on video. So the issue over the last couple of years has been the volume of transactions that are occurring. They have gone down so drastically on the commercial side, especially that prices are still remaining high. There's not enough deals. Not enough deals. So what happens to a person who originates loans? You got to find the deals where they are. And being in business for yourself is a lot different than being in business for somebody else, right? Because it's your fault. You did great, it's fantastic, but if you do bad, it's your fault. And you can easily get into a mindset of like, oh, there aren't that many transactions out there, what are we going to do? It's just the way that it is. And so over the last, since that time frame, we've completely taken a mental shift. It's like, I don't care how many transactions there are out there, I'm going to find one. I don't care how many people are getting cheaper money somewhere else, we're going to go make an impression. When pricing goes up everywhere across the board, service becomes king. It's always king, but it's only got a certain dollar amount on it, right? You go into Nordstrom's, you buy your jeans for $180. If you love them, fantastic. I go to Nordstrom Rack, I buy the ones that don't fit right for $79, I'm happy, right? But if those Nordstrom Rack jeans were $150, and I only have to go to Nordstrom for $10, $15 more, I'm gonna go to Nordstrom. They will know my name, they'll say hi. The person will call me when the jeans come in, and I'm just using a very simple, kind of analogy here. So if you treat people the right way, you will do well in this business. I don't care if you're on residential, if you're on commercial, if you're lending, if you're escrow, if you're MLS, if you're doing advocacy work. It's an important business to really make sure that you are being yourself and treating people the right way. Yeah.
So the burning question that they're all asking and are afraid to,
No, I'm not hiring. Sorry.
how much do you make?
How much do I make? I would never answer that question with a camera on. Because if the IRS, being a small business owner, you are constantly dumping money back in your business, right? It's not a salary job. You are working for commissions and distributions. You are working for how can we grow the business organically. So even in the years and in the year right now that we're doing really well, it doesn't show. Right? So I am doing all that I can to build a business in the next 10 years that I do not need to be a part of. And that costs a lot of money. So we are pushing about $1 million of revenue, almost kind of within a range, The more commercial deals we do, the more loan volume we'll do naturally because those deals are larger. But we have a processor, we have technology we have to pay for, we have mortgage software that we have to pay for, we have licensing, we have insurance, we have a mortgage banker's bond, we have all the stuff that costs money that nobody thinks about. So it would be nice to say that if you just took that $750 and cut it in half, it would be mine. We have to pay for health insurance. We have to pay for, California's not fun in that sense, right? So I'm not going to give you a number, but we're doing okay.
So what do you like best about what you do?
This. I love, I've gotten into a space in my life right now where, in our business, where I just want to teach people about what we do. There are investors that want to get into this space. They really, really do, but they don't know their ass from their forehead. And so it's important to give good information. Now, if that results in me getting business from that person, fantastic. If it doesn't, I sleep good at night. That's the main difference, I think, when you work for yourself, you feel a pride in being able to have that mentality. When you work for somebody else, it's about meeting your quotas. So that conversation and teaching somebody makes you have a little bit of added pressure to close that transaction, to close that relationship. But if you just provide information and really be an expert in what you do, it all comes back. It all comes back. So I love speaking to people. I love evaluating properties. I focus on the origination for our business. My business partner handles the investors. So navigating the front-end process of closing a transaction is really what I love. Yeah. Did you have a question?
Do you want to teach a class if you want?
Yeah.
See, networking, guys.
There it is.
Yeah.
As a business owner, what's your favorite thing that you've written off?
My favorite. See, so that's a really funny question, you guys. When you say write-off, do you know what that means?
Yes, I do.
What does it mean?
Well, you can 179 a car, or you can deem anything that's deemed necessary to a business or to the IRS.
No, I get that part, but what does it mean? Does it lower your tax basis? Does it give you a credit? So when you say write-off, you're still spending money, right?
It's just not going to.
So I would say fringe benefits as opposed to writing things off. I asked my business partner, who is a CPA, he doesn't do our taxes. We hired somebody to do our taxes. I always ask him why we don't write off more. And he laughs because he knows I have no idea what I'm talking about. And then we book a tea time at Torrey Pines and we go play golf. And we network with people that we want to play golf with, right? So the fringe benefits of that kind of stuff, you know, client dinners and lunches, going to real estate offices with Panera, pastries and bagels and coffee, you know, paying for gas, right? Closing gifts. You know, those are the things that we consider a business expense. But we're not buying trucks that are over 6,600 pounds, so that we can appreciate the value in the first year.
It's one of the best parts about being a business owner.
I would say it is, but I don't think it's, I honestly don't think it's it's not as direct of a feeling on your bank account and on your tax bills and on your, one of the best things that happened, I'm not a tax advisor, do not take this, we can mute this or edit it out. One of the best things that happened in California, they passed a law that your entity, your LLC, your S corporation can now pay your personal state taxes, and then it takes down the basis of your federal blah, 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 whatever. That's been the best thing that has happened. So our company can pay, as business owners, our kind of state taxes and distribution on that. And again, I butchered that completely. So Brad, my business partner, I'm sorry, dude. If he watches this, because I'm gonna ask you for the video. So we got to post it. If we don't post it, it doesn't happen. So yeah, I mean, it's always good to think about write-offs, but you need a healthy business to consider that. And you can't write off. I mean, you can. So that's the other part, is you can do things that are kind of frowned upon. The problem becomes like, if and when you're audited, what happens, right? So you just have to be very careful. You know, again, you live in California. If you do something wrong as a business, it's going to hurt a lot more than just getting that, you know, whatever it is. Oh, I'm going to go suit shopping because I need it for business. Okay, cool. Stuff like that. Any other questions? I have cards. If you guys would like cards, I'll bring them out.
And let's give Corey a round of applause.
Yeah, I had a question. I was gonna ask, what did you graduate at CSUF?
So I did business administration with a somewhat of an emphasis on finance, but my finance was more on the ethical side of things. I didn't really take too many classes that were numbers oriented. HR, there were some classes back when I was doing that. I just thought the creative side of the brain on that was that. But I had a minor in human communications. Yeah, and so debate classes, and I was over on the other side of Melwood in that building. I like talking. I've never been afraid of speaking in front of people.
And what was your first job when you graduated? Did you go straight into what you're doing?
So I took the easy way out, right? When I was in college, I had a friend approach me and asked me if he wanted me to intern for him at a place in Orange called Alliance Funding Group. And that the owner of that company was also Cal State Fullerton alumni. It is an equipment finance and leasing company. So if you wanted to, as a business owner, buy tractors for your construction company, and you couldn't get a loan through Caterpillar, because Caterpillar is like the auto dealership of it, and you needed to get a loan through third party, that would be me. And I got into that business, and as I'm interning, it's 2006, 2007, right? The world is doing great. And I'm going to the sales meetings every month on the last Friday of the month. And we're seeing the checks get presented to all the guys that are working there. And they're making $25,000 commission, $60,000, and I'm sitting there, you know, with spiky hair, probably like old baggy dress clothes. Like, I want to do this. And so I didn't do what you're doing because I took the shortcut. I was like, I already know what I'm going to do. I'm just going to fine tune how I work in this business until I could get to go full time. And when I went full time was January of 2009. Probably the worst time in the history of our world to do a finance sales job on 100% commission. And so that lasted 9 months, you know, closed a few deals, but it was very bleak. And then took a complete pivot and worked in corporate America for Skechers, the shoe company in Manhattan Beach. Did some international logistics. And it was at that point I realized I was not a corporate player. You know, I was not. If you're the type of person when a manager comes to you and says, okay, you got to do it like this, and your immediate reaction is, well, why can't I do it this way? You probably should work for yourself. Right? And so that was just me. And eventually after that, I got into real estate, and very niche industry, but it's a lot of fun, a lot of really fast-paced. So, anything else?
All right, let's give him a round of applause now.